If you're looking for a podcast that packs in sound property advice, as well as offering you an insight into making the world of property effective and ultimately work for you, you're in the right place. Hosted by Arsh the original property rebel. He's written an Amazon bestseller, created the Property Investor app, the UK's first, and is an experienced property mentor. More importantly, he talks the talk and walks the walk.
Hi and welcome to another episode of The Property Rebel with your host Arsh. And in today's session we're going to be talking about how to add value to your portfolio and to properties, and how to also stress test, and why this is probably the most important time to be able to do this. So before we do that, I want to say a quick thank you and a quick hello to all new and existing listeners. So if you're listening to the podcast, first of all, thumbs up. Thank you very much for checking in with me today, shall we say. As always, this is a one-take edit, which means that there's no cuttings or there's no edits. What you hear is how it's been recorded. So we are going to get some ifs, ums and ahs, but believe it or not, that's okay. I want to ask a small favour before we move on. If you've got a question that you would like me to answer in the forthcoming podcasts or the forthcoming episodes, please write me a review and also put in the review the question that you would like me to ask. So we get thousands of listens every week on the podcast, and it's fantastic to watch. You've got to remember that this is only a few months old and we've hit over 16 different countries across the world. But what I want to know is that what are the burning and the desired questions that you've got that I can help you with. So if you can, do this in a two-tier approach. First of all, leave us a review on the podcast store. So go to the podcast, Apple Podcasts, wherever you're listening to this, go to that store and leave us a review. As a result, that will get us up the rankings. The higher up the rankings we get, the more listeners we get. The more listeners we get, the more questions we get. The more questions we get, the more value I can add. So that's just a bit, almost like a bit of a plea. If you can help me out with that, that'd be massively and much appreciated. Now, let's get straight into it. Adding value to property and stress testing. Now, recording this, there is a chance that we may go into a second lockdown. However, the question is, what have you done to your portfolio to check if it's working the best that it can work? I do this every year without fail. I have a look at how much the portfolio generated last year, how much it's on target to generate this year, what kind of properties have we got in the portfolio, are the ones where we can maximise, could we increase the rent slightly? So let's work through this systematically. Let's work through the single lets, the buy to lets. The single lets, the buy to lets, have a look at what tenants we've had in there. Let's have a look at what rents we're charging. I also then start to have a look at where we are in comparison to other competitors in the area. So I pick a postcode. I then go to a place like Rightmove, Zoopla on the market and check what other rentals are doing in that location. And I'm checking to see if the rents that we're charging is a fair rent or whether it's under rented. If it's under rented, I then start to look to see what we can do to increase the rent. Now, I appreciate some of you may look at that and think, well, hang on. In a testing time where people are struggling financially, should you really be increasing the rent? And depending on which side of the fence that you look at, my answer is yes, because I've still got outgoings to pay. Our costings are still consistently increasing. So with the introduction of Section 24 and everything else that comes along with it, they're talking about having electrical testing as mandatory, as well as all the gas safety certs and all the insurances that go up year on year. Our costs increase. So therefore, if we don't increase our income, that means that our bottom line, our cash flow is always going to suffer, which means that our cash flow or our profit every year is going to decrease. So you have to look at ways that we can try and maximize that. So tip number one, what's your buy-to-lets doing? How are they performing? Now, when we look at buy-to-lets, have you got mid-terrace properties? Have you got semi-detached houses? Have you got apartments? Now, my second point is that if you've got apartments, have you looked at how they're performing as a buy-to-let? Have you looked at other strategies that you could potentially maximize on those? So when we're looking at apartments, one of the big strategies for the last few years is service accommodation. Have you ever tried running that apartment on an Airbnb? Now, there are a couple of disclaimers here. First of all, first disclaimer, Everything that I provide in this podcast is my opinion and is not deemed as financial advice. Have to always put that in there. Second disclaimer is that if you are going to run it as service accommodation, you need to make sure that you've got the freeholder's consent, the leaseholder's consent, as well as mortgage and insurance consents. So if you are running a serviced accommodation unit, or sorry, if you are thinking about running a service accommodation, run some projections. Run some projections as to here's the income that you're currently generating and what are your costings out of that. So are you using a letting agent? How much maintenance, how much the bills did you pay last year? Now, this year, if you were to run it as service accommodation, look at what figures. So let's just say that other rents in this location or other nightly rates for service accommodation, nightly rates are fetching in this area. And let's just work on £100 a night for argument's sake. Nice, easy, round number. Now, off £100 a night, you can't, it's very unlikely that you're going to run at 100% occupancy. I always look to see what my break-even point is. So I've got a holiday let or service accommodation unit, depending on what you want to call it. It's down in Cornwall. And the way that I work on it is that my break-even point, I always look at what my break-even point is. So my break-even point is what's it going to break even at, taking into consideration mortgage costs, taking into consideration insurance, maintenance, booking fees, cleaning fees, and all the other fees associated with it. I have a look at what my break-even point is. And if that break-even point, for me, it's got to be within the region of around 35%. I know lots of people that run their figures on circa 70%. And if you're break-even at 70%, my honest opinion is it's far too high. It's far too risky. You know, if your break-even is around 30%, 35%, that's fantastic. Now, what you've got to look at is that based on £100 a night, and you could fluctuate your rates, by the way. So rates for during the week or rates for the weekend may be a little bit more expensive depending on the location. Base your figures on, and the other thing that you could look at is variance, such as high season, low season. So the property that I've got down in Cornwall, yes, we get very high seasons. We get high seasons from about, I think it's April to September, and then low season is circa October back through to February. So as you can appreciate, it's seasonal. So these are things that you've got to take into consideration. So when you're looking to add value, you've got to do not an optimistic, but also a pessimistic approach to forecasting. What's the worst case scenario? What's the best case scenario? And then you can understand where you're going to be in between. So worst case scenario, what's your break-even point? Best case scenario, what's it going to generate? And roughly, where do you think you're going to be? If you can work your occupancy of around between 50 and 60%, and you're still making a decent amount of cash flow, you've then got to have a look at what that cash flow looks like in comparison to the single lets. Is it easier to run the service accommodation? Could you put the systems in place for that? Are you in the right location for it? Or is it just easier to run it as a single let? Yes, you may be making a little bit less cash flow, but it's almost like a let and forget. So these are things that you've got to take into consideration. If you've got houses, now is the perfect time to start looking at the possibilities of, is there ways that you could potentially extend it? Is there ways that you can get planning permission? Could you go up in the loft? Could you extend it out to the rear? You may not have the funds to purchase another property, but will you have the funds to potentially increase the value in the stock that you've already got? And this is what is called stress testing. I stress test my portfolio all the time. Have you got a property that has been running as a single let, but really, in reality, it is probably better suited as a multi-let just because of the layout, and you've probably not done it as a multi-let just purely because you're probably a nice person and you've got a nice tenant in there and it's working quite nicely. Now, when that tenant comes to an end, you may decide that it's going to be the ideal opportunity to turn that into multi-let. Now, there's lots of things to take into consideration. You have to look into consideration, and again, there are some disclaimers here. You've got to make sure that you're in, you've got to look at the legislation, you've got to make sure that you've got the right mortgage, right insurance, etc., etc. So this is all down to you doing your due diligence. Now, in terms of HMO, could the property become a HMO? And again, look at the two cash flow models. How much cash flow has that property generated last year? How much cash flow could it potentially generate as a HMO? How much is it going to cost you to convert into a HMO? How long is it going to take you to get that money back? What could that money be doing elsewhere? Have you got the funds to purchase another property? If not, put it to good use. Let's face it, if it's sitting in the bank, it's doing nothing. If anything, it's going to potentially lose your money, especially with the talks of negative interest rates. It's actually costing you money to put the money in the bank. Before, putting the money in the bank was a safe haven. Now, unfortunately, putting in the bank is actually a liability, in my personal opinion. So you've got to have a look at what's that property doing? What's the layout doing? Does the property lend itself out to a potential multi-let? If not, let's just imagine that you've got a 2-bed terrace property. Is there some way that you could rework the layout so that you could run it or turn it into a 3-bed? Could that upstairs bathroom be put into a downstairs extension and that bathroom upstairs be turned into a 3-bed? If that's the case, again, you've got to work on the figures as to how much is a property worth as a 2-bed, how much would it be worth as a 3-bed, and what's the potential cost. Now, here's a little tip for you. Just because you get planning permission doesn't mean that you have to build it. So potentially you could get the planning permission and you could add the value that way. By literally getting the planning permission in place and potentially triggering the building regs application, you could add value to the property. So when you come to refinance, so let's just imagine that you got planning permission from a 2-bed to 3-bed and you've triggered the building regs so that we've now got a lifelong application. Here's a little tip that not many people know. To trigger a building regs application, all you've got to do really is put a spade into the ground. Spade into the ground, or almost like a nail into the wall, and you can say that you've started work. As a result of starting work, your planning permission, then people worry about having to do the work within 3 years. The moment that you trigger the building regs application, you've now got a lifelong application, which means that that 3 years is now irrelevant. Little tip for you. Hopefully you've enjoyed that one because not many people know that. So once you've triggered the building regs application, you now go and potentially look to refinance that property. So you're now not refinancing it as a 2-bed, you're refinancing potentially as a 3-bed because you've now got this added benefit of planning permission, which means that it's increased in value. So in that respect, you potentially stress testing your portfolio. So you're potentially getting some money out of the property if you require it, and that money then could go on to purchase other properties. There are lots of other ways that you can stress test your portfolio. One of the things that I've done recently, which I'm actually recording a series on my YouTube channel, that's not a plug by the way, is that on one of my block of apartments, I've got some surplus land, and I've been meaning to do this for a while. And I put in planning permission for a pair of 3-bed semi-detached houses, so 2 3-bed semi-detached houses. And what we've recently been granted planning permission, and we're going to build it whilst we're going through probably what I'd say a quieter period in COVID. So in that respect, we're stress testing. So that piece of land now has now got, as a piece of land, it had a certain amount of value. Let's just say it's worth 100 grand. Now with the planning permission, it's now worth in excess of 200,000. And in order for us to do that, it's cost us approximately 3,000. So 2,000 in architect's fees, £1,000 in planning permission fees. It's cost us £1,600, is it? Sorry, £1,600 in building regulations costs. So it's going to cost us, let's just say the best part of 5 grand. But as a result, we've uplifted the land by 100,000. Now we've got two options. We can either sell that land off separately, or we can build them. And as a result of that, we can then increase the size of our portfolio. And what we're finding is that some builders are a little bit quieter right now, so they're prepared to do a deal on some of their costings. So previously, to build a 3-bedroom semi-detached house, which is 2.5 stories, they probably would have been looking circa, we're talking just labour costs here, circa around 100 grand. At the moment, we've got them roughly around 85 to 90,000. So we've saved ourselves some fees, some money there. So we've got, and we reckon that the houses in that location are going to be worth within the region of between 200 to 250, 200 being your worst case scenario, 250 being your best case scenario. So you can see there's a real way of adding value to that. But that was a piece of land that was sat there. So if you've got a property and you've got a bit of garden space, have you ever tried running the planning permission on that? Have you ever tried putting in a pre-application? Pre-application costs the pre-application costs £100. in my authority or in my local authority. You may just want to check that for your area, wherever you may be. But again, it's about stress testing to understand what you can do, because once you've got planning permission, that has now increased value. You start looking at every angle. What is it that you can do? So in terms of costings, are you being the best and the most efficient way with your insurance? Have you got your insurance with lots of different lenders? Have you ever thought about bringing them in-house? So with all my whole portfolio, we're on a block policy in a portfolio insurance policy, and as a result, every year we go out to tender. So we go out to different brokers and different insurance companies and say, guys, here's what we paid last year. You've got to beat it this year. There's been no claims. Here's the client group. Bang, bang, bang. And we send it out to 4 or 5 different people, and we see who comes back with the best quote, with the best cover. Remember, it's not about price. It's about the cover that you get, because it's all very well paying 10 pence for your insurance, but if something hits a fan and you need to claim on it and it's not covering you, it's kind of pointless having that cover. So there's another little tip for you. So other things to take into consideration: have you looked at where your mortgage products are? Have you looked at, are you now in the flexible rate? Have you come out of the fixed period and you're now in the variable rate or the flexible rate, depending on what you want to call it? Have you started to look at, are there any other mortgage products out there which could be cheaper for you? There's some cheap money out there right now. So are you making the most and the best advantage of that? If not, why not? Some of us fall, and I've been guilty of this, some of us fall and become complacent when we have got some lending and we say, oh, well, that's it, fine, we've got lending for the next 25 years. But the first 3 or 5 years may be fixed at a very good rate. After that, it then goes into a variable rate, which means that, believe it or not, it's actually expensive lending. So you may want to start looking at and thinking, well, hang on, okay, I'm in a variable rate. I'm actually paying, let's say, 3% above base. And base, let's face it, is very low. So it may be 3.25%. However, there may be lenders out there that may be offering you for 2.49. So you're actually saving yourself the best part of a percent. But when you look at that as a percentage over the years, it's going to save you a significant amount. Could it be easier that you start to look at your portfolio and put them into a block policy or into a commercial facility, almost like a hunting fund? Have you got leverage on your portfolio? Is there equity in your portfolio? So one thing that you could do is go to Lloyd's, and there are other banks out there, should I say, and go to the portfolio commercial lenders and say, guys, okay, here's my portfolio, here's what we think it's worth, here's its current lending. Would you like to take one loan on the whole lot and remove all the smaller loans? That way you save yourself a massive fees from all the individual lenders, and it's all sat in one place under one umbrella. I did this back in 2007, and it's a godsend, because now what I tend to do when I look for a new property, I just call one guy who's my commercial lender in Lloyd's and say to him, I'm just trying to think who we're dealing with right now. Forgotten his name. Starts with a J. It'll come back to me in a second. Anyway, I'll pick up the phone to him and say, hi, how are you? And we have the niceties, the short talk and the small talk. And I said, well, I'm looking at this new property. And he'll look at my portfolio and he goes, yeah, okay, Arsh, I understand it. You know, your current loan is X amount. Your property value, your property portfolio is worth this much. Therefore, you've got equity in this. If you want to buy it, we can lend on it. So again, they're stress testing my portfolio, they're doing the work for me, and it allows me to constantly keep buying properties. We add that property in, they decide whether they're going to take a charge on the new property or they take a charge on the existing portfolio. I'd rather they take a charge on the existing portfolio, which means that I've now got a new unencumbered property into the portfolio, which means that I can leverage on that in the future. So there are ways that you've got to look at this. If you want help with this and you want to reach out to me, please send us an email. You can do. Send it to my PA, which is admin@arshilahi.com. More than happy to help. I've done lots of this, and I try and stress test pretty much every year to ensure that we're being as effective and cost effective, and also from a business point of view, effective as possible. So there you have it, guys. That is the best way of stress testing your portfolio. That is the best way of making the most of what you've already got. We all like to buy new properties, but sometimes we kind of forget the stuff that we've got. You know, we could talk, and I will do another episode on pension pots and SAS and ISAs and stuff like that, because again, that's stuff that I'm involved in, and I can talk to you about, is that the best way for you to go moving on into the future? I'll also do other episodes about buying properties personally against limited companies. All my stock, large majority of it, should I say, is in a limited company. There's still a few that I've got in personal names, but they are being incorporated as and when products become available. So on that note, guys, hopefully you've enjoyed the session. Hopefully you've taken lots of notes. Again, if you want to reach out, if you want to ask a question, please ask a question by leaving us a review. We're getting so many views and so many listens on this podcast, but I'd like to try and increase reviews if possible. So if you could do that for me, that would be much appreciated. Finally, guys, as always, if you want more information, I've got a very vibrant YouTube channel. It's called Arsh. So go to YouTube, search for Arsh. As a result of that, you'll see all the videos that we put out there. We put out a new video every Thursday at approximately 4 p.m. So that's a bit of free information. As always, you can connect with me on social media. So again, you can find me on Facebook, LinkedIn, Twitter and Instagram by searching Arsh. And I'm always quite active on social media as well. Finally, as I mentioned in every single episode, have you downloaded the Property Investor app? If not, why not? Because it's a phenomenal resource for you as a property investor, whether you're looking to buy a property or whether you're looking to sell a property. Now, if you've got a property for sale, why don't you list it on the Property Investor app for absolutely free? It costs you nothing to do that. And if you're a deal sourcer, we can work with you where we work on a split fee basis. So it's not costing you anything to list. And because our list is quite a vast and increasing list on a daily basis, we've got a very good chance of selling your property. So if you like that and you want to get in contact with us, please, first of all, you can go to the website, www.propertyinvestorapp.co.uk. If you've got a smartphone, why don't you download the app? So go to the App Store and type in Property Investor. You'll see our little logo. It's a little blue house with a key right in the middle. As a result, download it. You can find it on the iOS App Store as well as the Google Play App Store. Download it. It takes you 2 minutes to register by putting in your name, email address and phone number, and within the palm of your hand you're going to see over 200 deals, and we've got all kinds of deals: below market value deals, rent to rent deals, lease option deals, just to name a few. We've got commercial deals. We're consistently updating the app, so it's a phenomenal resource whether you're buying and also whether you're selling, or even if you're just window shopping and looking to see what the market's doing. On that note, guys, as always, I wish you all to be safe, well and happy, and I look forward to speaking to you all very soon. Thank you and bye-bye.
The large majority of people make a positive change if they take immediate action. So act now. Download the Property Investor app and join Arsh on his social media channels to excel your property journey.